I am going to show you this hidden pattern that could be indicating the markets are about to break out in a major way, as well as an updated market analysis and follow-up from last week. We'll be covering the Mag 7 stocks and a new pattern on Wall Street Bet's favorite stock, Gamestop. So let's kick things off with the VIX. Just like I pointed out in my last video, this pattern on the Ichimoku cloud was indicating that we were going to have a short squeeze on volatility, and that's exactly what we got. So from here, we could see this potentially going all the way up to around 30 to retest this strong resistance line here in blue, or if it decides it wants to come back down, we could see it retest the previous resistance, now possibly turn support line of this previous long-running ascending channel here in yellow, somewhere around 1860 to 19. On the S&P 500 futures, we're already oversold on the daily RSI, but we're also near the lower Bollinger Band here at a key level of around 5,400, and we're just below the 100 simple moving average. The baseline of the Ichimoku cloud is also here in orange, so there is a lot of support here that could actually force the markets back up. Similar to the futures, SPY is near the baseline of the Ichimoku cloud. It's still above that and the 100 simple moving average, but it is close to the lower Bollinger Band, and it's also very, very close to this long-running ascending channel that goes all the way back to around September of 2022. Throughout the years, we've kind of bounced in and out of it, but it still seems to be a valid channel. And to add confluence to the fact that the market could bounce from here, we're also very close to the lower support line of this descending channel here in purple. So there's a lot of reasons why, even though this looks like it could continue lower, it's actually probably more likely to bounce from here. We could potentially even test somewhere around 547, depending on where this goes from, and then continue lower. The Dixie is very near to the upper resistance line of this descending channel, and it's also below this main resistance line of this much bigger pattern that we've covered previously. And if we remember this symmetrical triangle pattern that it broke down from before, the pattern target for that still is somewhere around 98.76 to 99. However, we could see a situation in which it actually comes down to that level and then bounces. Like I shared before, when we look at this on the daily time frame, especially looking at the RSI, we have a bit of a descending triangle pattern that's forming here, and it looks like it's trying to break out. So I could very much see Dixie defying everybody's expectations, and once it's met or gotten close to this pattern target here, actually breaking back out to the upside. And we would expect it to have to break this 103.50 very key level if we actually wanted to see continuation to the upside from there. And we have to keep in mind that as the Fed cuts interest rates, we're going to expect to see a weaker dollar, but there is the euro-dollar system, which is going to still create demand for the dollar. Especially, we have seen the dollar be treated as a safe haven asset. If we go into a recession, people will dump probably all the assets they have into dollars and hold on to dollars. And I won't keep you waiting around anymore for this main pattern that I want to share, but please stick around because we have so much more to cover after this. Remember in my last video, this was this symmetrical triangle pattern that looked like it was going to break to the downside. It did, came back up, kept retesting this resistance line. Remember that patterns morph. Now what we can see more clearly as we've developed more price action is we have a lower, well-defined support line and a higher, well-defined resistance line. The angle of all of this is indicating a falling wedge pattern, which if that plays out, eventually we would anticipate to see the markets push up very sharply and very strongly. It's kind of a contrary indicator, but typically when the market is the most bearish, that's when things reverse. So this isn't financial advice, but me personally, I'm going to be looking for ways to hedge, possibly with calls. And I wouldn't be surprised at all to see this breakout on Wednesday with the release of the CPI report. If you're loving the accuracy of my market predictions and believe someone else could benefit from them, please like and share this video with them. And if you don't want to miss my weekly analysis or the real-time patterns I share on the community tab throughout the week, don't forget to subscribe and tap that notification bell. Just as I had pointed out in my last video, all of the Mag 7 stocks were in symmetrical triangles, indicating that a strong breakout was going to occur in one direction across the entire market. If you'd like to see some of the higher time frame patterns that I covered previously and their pattern targets, feel free to check out my last video linked above. I've got a quick update on the chart of Nvidia. As you can see, as more price action has developed, we now have a lower support line and a upper resistance line in purple, appearing to form a giant symmetrical triangle pattern that is going all the way back to June 20th of 2024. Depending on where this breaks out, we could see Nvidia either going to somewhere around 170 per share, which would be confluent with this upper resistance line, this long running resistance line, or we could potentially see it come all the way down to about 67 per share, where there is actually a daily gap here that still needs to be filled. And taking a quick look at Google, it broke down from this symmetrical triangle pattern that we pointed out before. It's still targeting around 145, but it's sitting right at a very strong support level. So we absolutely could see a bounce from here, possibly to retest this previous support line that could now act as resistance. And for all of my GME apes out there, I want to quickly look at this pattern. Right now, it looks to be forming an ascending triangle pattern, which actually can go in either direction. If this resistance line proves to be too strong, we could actually see this break to the downside. But if the apes are able to push it up through this main resistance, we could actually see this reach all the way up to about $30 a share again, which would have confluence with this previous high right here back around July 16th to July 17th. If instead we couldn't break through this resistance, we would actually expect to see this to come back down to around like $17 to $18 a share, which would also have confluence with this previous low. And considering that earnings is out after the bell on Tuesday, I could see it going either way. However, what I have noted before is we have a bit of a basing pattern here on the RSI, another basing pattern here. I actually would anticipate a pullback probably to this support line and then another basing pattern. So personally, I'd say this is probably more likely to break to the upside than it is to break to the downside, at least initially. Taking a look at the economic calendar for the week, actually coming out tonight at 1950, we've got Japan's GDP, which could affect their potential interest rate decisions coming up. There's not much of anything really going on Monday, and not a whole lot going on Tuesday other than this 3-year note auction. So I think the big market movers are definitely going to be out Wednesday and Thursday. Wednesday, we have the US CPI numbers coming out along with the 10-year note auction, so that could definitely affect Treasury yields. And then on Thursday, we've got the European Central Bank's interest rate decision, the initial jobless claims, PPI. We've even got another 30-year bond auction, which again will definitely affect Treasury yields. And the reason that it's so important to keep up on what's going to affect yields in different countries is it's going to affect Dixie. The yield curves are uninverting. Eerily, the last time that the 10 and 2 yield curve was inverted for this long was right before the Great Depression. Unfortunately, I don't think that's just a coincidence. If you aren't aware of how this could absolutely tank the markets, check out my hypothesis linked above on what I believe may be really driving the markets. It's probably not what you think. And then taking a real quick look at Moomoo's earnings calendar, it's kind of light this week, at least in my opinion. We've got Oracle coming out Monday after the bell. On Tuesday, GME has their earnings coming out after the bell. And then on Thursday, we've got Kroger, so we're going to get kind of another idea of what's going on with retail. And as always, nothing that I've said in any of these videos should be considered financial advice. Best of luck this week, cool cats. And without further ado, let's get into today's trading rule to live by.